Hey everyone, and welcome back to Small Engine Edge. Today we're going to talk about one of the most important, if not the most important things that you need to know to run a small engine repair business, and that is financial literacy. You need to know what your numbers are. You need to know how much you're making or that you're losing, how much you should mark up your labor and your parts, and what your overall overhead and strength or weaknesses of your business are. If you don't know that, you're not going to go very far. You can go down in flames very quick, or you can grow very quick if you know these things inside and out. Don't forget to hit those like and subscribe buttons as we go along if you enjoy the content. Understanding your profit or your loss. You've got to understand what's actually coming in, what you're charging on the top line, so what you're making, both your labor and your parts sales. Any of those numbers will go to that top line. Okay, that's what your income actually is, but that's not what your net profit is. You've got to take all the expenses and out of that, and that's what you actually have made. So say you made $5,000 for the month. Well, hey, that looks great on paper. But then you've got insurance, you've got overhead, you've got parts and supplies. You may have labor if you're paying somebody. All that has to be subtracted out. And if you're not keeping good track of that, it's very easy not to know exactly what you made. From zip ties to oil or oil dry or whatever the supplies are, they all come out of that top line profit before you actually know. If you're not good at math, you're not good at these numbers, you've got to do some research into that, and you've got to learn basic addition, subtraction, division, multiplication, and tables and charts. Those are the most important things as far as math goes. Some people just aren't great at math, and that's okay, but you've got to study those things and become a little bit better if you're going to run a business. If you don't know those numbers and you can't quickly figure out what your margins are and what you should be marking something up, whether it's with the help of an app or a software or not, then you're not going to do very well. You've got to know what you're making, you've got to know what you're losing, and you've got to know what you should make on each job. It looks very good sometimes to say, hey, I'm going to make this much in just a couple hours doing this job, and you don't figure in the costs of that. You don't realize that you've got to spend a ton of time and supplies to do that job, and it really cuts into your profit. So you're not really making that. So don't price those hourly or project jobs just on parts and labor. You've got to figure in supplies and overhead costs. Your overhead costs may be low, sure, but those have to be figured in at least over the course of that month or whatever period you're figuring them in, so that you don't lose money and so that you keep continuing to profit large. When you don't do that, you're going to quickly notice that your income, all that income that you're showing, is going out the window and you don't know why. You're making good money, but you're not sure exactly why. Some of those things, if you don't have any sort of buffer too, you're going to build these jobs, and if you're not getting paid right away for them, customers aren't picking things up. You have all those costs into these jobs, but you're not getting it back right away. Cash flow is a huge killer for businesses. So you've got to know how your money is going out and flowing back in. Because if you're waiting on $5,000 worth of payments and you don't have any money in the bank, you can't continue to pay rent or utilities or overhead, your labor if you've got employees. So you've got to keep those things flowing. Know how your cash flow works and know when you're going to get paid. Startup capital needs, we've done a video on this. That goes right along with financial literacy. You need to know what it's going to cost you to start up your business if you haven't already, whether it's out of your garage or a commercial place. You've got to know what it's going to cost to continue to run that business and what it's going to cost to actually set it up. Tracking every dollar and every expense in and out is something you should do from day one. When you do that, we use QuickBooks. It's very easy to keep track of, and you know exactly which segment you're spending every dollar. You know what's going out, what's coming in, and you reconcile that with your bank account. So you make sure every transaction on your bank account or your credit card, whatever you're using, is going into your books, and every expense is coming out. Every income and expense is accounted for, and then you know exactly what the financial outlook of your business is. QuickBooks is good because it gives you those month over month and year over years, and you can see the larger picture with that as opposed to just focusing on little times if you're doing it all by hand. I don't ever recommend doing it by hand. There's enough technology and even free accounting softwares anymore that it's very easy to do that way. For taxes, you've got to, as a small engine repair person, if you're a sole proprietor or you're not a corporation yet and you're not paying quarterly taxes, you've got to save for those. Really, you should be always paying quarterly taxes, or you are going to get penalized for that in some way, shape, or form. That means on tax day, you're paying what your estimated taxes for the year are. If you've already got a year behind you, it's very easy to split that into 4 payments of whatever the taxes are. But if you don't save some money up for those, you're going to get hit with a tax bill at the end of the year, and you're going to say, oh, shoot, how can I pay this $5,000 bill when I don't really have that big of an income? You look at those when you're bringing in all that income, you're looking at that as, hey, this is all profit. Well, the tax guy will always get his one way or another. You've got to plan for that, and you've got to make sure to save that money. And if you pay those on time quarterly, then you don't get penalized, you don't pay extra interest, and the tax guy is not going to be sending you a huge bill at the end of the year that you're going to have a hard time paying. I did make that mistake for the first quite a few years and didn't pay quarterly taxes. I looked at it as, hey, I'm reinvesting this into the company, but really it wasn't a smart business move. I should have paid those up front, and it would have saved me a lot in the long run. Although I did use that money as investments and to grow the business, so maybe I got a little better return than the penalization that I was getting from the IRS. But really look into that. Don't just throw that to the backside and not think about it. That will not get you anywhere. It's going to get you in a lot of legal trouble if you don't pay them too. They will come take everything from you. The IRS has a lot of power when it comes to taking all of your stuff. They can repo your car, your house, or any of that. If you don't take care of your taxes, you don't file them and pay them. Make sure that you take care of that, if not quarterly, at least yearly, or file for an extension if you can't pay it right away. They allow that. If you're not sure about that, bring it to a tax pro or an accountant, and they can usually guide you or give you some more sound advice than I can on how to take care of those going forward and what you should plan for best to fit your needs. You've really got to use all of this financial literacy to figure out when to reinvest in your business. Once you know what your cash flow is, what your income and expenses are, you know what you're actually making. So it's not just the money in the bank, it's long-term financial success or long-term financial expense, depending on how well the business is doing. You've got to know when you can take some of that money and you can put it back into the business. Don't get stuck on that shiny object treatment where you go buy the biggest and the best brand new toolbox and tools and lifts and all of this stuff, and then realize later that you really didn't need that stuff, or that stuff put a financial burden on you. If it's stuff you have to borrow money to do, be very weary about doing it. Do a lot of research into it. You don't need the brand new Mac Co. or Mac Toolbox. You just don't. That's not the way to invest back into the company. That's not the way to invest back into your tools or your skills. Invest in something that's going to quicken your diagnostic time, or it's going to quicken your repair times. It's going to make things better as far as storage or organization or inventory. Better inventory is always a good thing if you're actually selling those. Do that research. Same thing, financial literacy. If you're using that accounting software like QuickBooks or whatever, you can see very quickly exactly what you've sold for the year or even for the last few months, and know what going forward you're going to sell. Very easy to reinvest at that point. And once you get that inventory and stuff built up, you can invest into other stuff that you're going to sell, other equipment, and things, again, to make everything more efficient for you. You've just really got to save the flashy upgrades until you can really afford it. Do not price yourself out of the market either when it comes to doing repairs. Don't lower your price to stay competitive. You can't lower your price below what the profitable level that you really need to be is just to get more customers. If you do, you're cheating yourself, and eventually it's going to drive you out of business. If there's a guy, Joe Schmoes, out there doing it for $45 an hour, that doesn't mean that you should. Cheap customers, cheap prices are not always where you want to be. Maybe fine just getting started off to get your name out there a little bit, but don't stay on those things too long. You don't want to be the cheapest. You want to be the best. You want to be somebody who gives good service and charges a good price at doing it. You've got to build business credit If you don't have personal credit, normally that means doing that first. We've got a video on that. Do it smartly and use that credit. You can use that as your fallback so you don't have to have a bunch of money in the bank, but you've got to be very careful doing it. If you can't pay it off every month or only in an emergency situation do you use it, you don't really want to rely on that credit. Be careful of taking out high interest or any loan where there's interest on it. Unless it's an investment in the company, if you really work those numbers to figure out how much more it's going to make you. If you're going to make an extra 15 or 20% for the year, and that adds up to a large chunk, figure out what the cost of that money is for the year going forward and figure out if it's good. If you're going to make an extra 10% year over end, maybe that is a good loan for you, depending on what the interest rate is, of course. If you're making 20% more and it's a 10% interest rate or 13% interest rate, is 7% really worth it? Is that, and it depends on what your numbers are. The larger your numbers are that you're going to make, the more percentages matter like that. Math, though, if you don't know what those percentages mean and you don't know what those numbers mean and you don't know going forward, you haven't kept track of your numbers, you're not going to know any of that. You're not going to be able to financially plan for the business or for the future, and you're going to drive the business into the ground. Even if you see the stuff coming in and going out and you think you really have a good overall view of what your numbers are, you get very, very tunnel syndrome looking at that very quickly. And I did the same thing. I thought I knew all my numbers. And next thing you know, once we started keeping track of everything that went in and out, you're like, wow, we're really paying a lot for overhead and expenses that I didn't even realize we were. Next thing you know, I'm like, well, we've got to raise prices to get a little bit more profitable here and make a little bit more money going forward so we can invest back into the company and we can build and get a commercial location and pay our employees so we can do vacation and benefits and stuff like that. Otherwise, you're not going to go anywhere. You've got to continue to grow. You've got to continue to invest in different things, and you've got to continue to grow your business, whether it's through investing in certain things you're going to sell or investing in yourself or in your tools or your supplies or expanding and marketing. All of it comes down to knowing those numbers and knowing what you can and can't do. All of us can do it. All of us are perfectly capable of learning these things, especially now with everything on the internet. A lot of these we have videos on. I'm going to put some of those links down below. Keep continuing to dream big. Keep continuing to learn and grow, and you will go far. If I can do this, you can absolutely do it. With today's age and all the information out there, there's no reason that any one of us can't go as far as we want to go. As much as we put our effort into it, you can go that far. However far you want to, you can take yourself there. I believe in each and every one of you. Thank you for watching. Don't forget to hit those like and subscribe buttons if you enjoyed the content, and have a great rest of your day.